So our topic of today is candlestick pattern. Okay, because if you want to learn technical analysis and you don't know anything about candlestick, there's no way you will understand it. Okay, that's all the clear fact about it. Okay, so now, firstly, let's know what is candlestick before we move on to let me say the complex ones. Because if you want to know about something, you have to know, let me say, the structure. How does it look like? It's just like you want to know about, let me say, specific animal. You have to know the picture of the animal, the labelings of the animal, the functions of the animal, and where the animal is found. You understand what I'm trying to say? So that's how we're going to do with candlestick pattern now. Okay. So now, firstly, what is candlestick? What are candlesticks? So from what we have here, they say a candlestick is a single bar on a candlestick price chart showing trader market movement at a glance. They say each candlestick shows the open price, low price, high price, and close price of a market for a particular period. So this big grammar they are just saying, let me summarize it. So a candlestick shows us where let me see where a particular trade open, where a particular trade closes, and let me see how the pressure how the pressure of the market, let me see the pressure of buying and the pressure of selling. You understand what I'm trying to say? Just candlestick just show us, let me say, the momentum in the market. You understand what I'm trying to say? So with time you will get to understand what I'm trying to say now. So this candlestick have three levelings. It's just like give example earlier with an animal. If you want to know an animal, you have to know the parts and their functions. You understand what I'm trying to say? So we have three parts in candlestick. So this is what we actually call candlestick, okay? These are what we call candlestick here. That's what I'm trying to say. So we have the green candlestick and we have the red candlestick. I will explain. They have two different meaning. Okay, the red one and the green one. They have two different meanings. So I'm going to explain that now. Okay. So now, firstly, let's explain the labelings. Let's explain the labelings first. The first one we have they say body, which is this. We have body, the body. Okay. They say the body which represent the open to close. Let me show you the body now. Let me show you. Let's use this. You see, this is the body. This green color you are seeing here is the body. And what they say which represent the open to close. You see this particular candlestick here. This is the bullish candlestick. That's why I say they have two different what's it called type of candlestick. We have the bullish and we have the bearish. If we are talking about the bullish candlestick, we are talking about the buyers candlestick. And if we are talking about the bearish candlestick, we are talking about the sellers and anything bullish from the word bull. You know, there's one particular animal, just like cow. Okay, if let me say that particular animal, if you get the animal angry and the animal want to kick you, he will use his horn from the ground and back you up. So that's where we get. Let me see if we can get something like this. Let me see. There's this particular something. This is the animal here. You see, this is the animal here. It normally packs someone from the below, then up. Then anything you see bull, anything you hear in cryptocurrency, you hear bull, okay? We're talking about going up. And if you have anything like bearish, anything like from bear, you understand? Bear, we know bear with what was it called? Going down. Like where do we find bear? We find bears in ice and normally where they normally hide or where they normally live is under something anything down from the word bear. You understand what I'm trying to say? I'm just making it let me say example so that you guys can understand. Okay. So now they said a body which represent the open to close. Okay. So like I said, this is the body here. This is the body, this green part, the only green part apart from these sticks you are seeing here, the only color there, that's what we call the body. And they said it represents the open to close. Okay. So now the open to close is it differ what was it called? It differs if the candlestick is bearish candlestick or bullish candlestick. Like this first one now is bullish candlestick. And normally, if let me say if let me say a bull want to pack someone, where it normally starts, it will put his head down. That's the where it opens, then it will move you up. That is where it will close you. So that is a clear example of what's it called a bullish candlestick. A bullish candlestick always open. The prices always open below, you see, and closes at the top as you see it here. You understand what I'm trying to say? So likewise, the bearish candlestick. The bearish, if let me say a bear wants to enter the ground, it start from the up, right? Then it not goes down. That means it's to open from the up. You see, the prices of the what was it called? What was it called? A particular asset always open. If you are talking about bearish candlestick, it opens from the top, then closes below. You see, that's what a body means, okay? And number two, we have weak. They say Wick or shadow that indicate the intraday high and low. Intraday high and low. This is what we call wick in cryptocurrency. And what's it called in candlestick? This particular stick here you're seeing, this is what we call wick. Wick. You see, these are what we call wick. That's what I'm trying to say. Then I say now number three, they say the color which reveal the direction of the market movement. A green body indicates a price increase, like I said earlier. You see, this is the what's it called? This is the bullish one, which indicate price increasing. Increasing, that means starting from the below, then going up. Anything bullish, price is increasing. And then I say while red shows a price decreasing, you see, which is this. So now I think we now know what is candlestick now. Okay. So after that, our main topic here is candlestick, right? Firstly, we know what is candlestick now. And I say we have two types of candlestick, which is the bullish candlestick and the bearish candlestick. And there are some things again we call candlestick pattern, not only candlestick again. Pattern is joined to it. Like candlestick do appear in different patterns. Like if you see this particular candlestick, you know that if you sight that particular candlestick in your trade, you know that this particular trade is going to go up or down. You understand what I'm trying to say? That's what candlestick patterns mean. You see, let me see. You see this candlestick, this how the setup, or this how, like if you just sight that candlestick, you know that what the market is going to do is either going to go up or go down. You understand what it depends on the kind of pattern you see. You understand what I'm trying to say? So now the first one we have here, you see, we have the bullish candlestick. Let's start with the bullish candlestick pattern. You know, anything we're doing, we'll be doing it too. The bullish part and the bearish part, because we have two different types. So now we'll be dealing with the bullish candlestick pattern. And like anything we'll be talking about these bullish is anywhere you sight this bullish candlestick pattern in your trade, just expect that that trade is going to go up. Like the price of that particular asset is going to go up from that moment. If you just sight it from that particular place, there's high probability, because in trading it's not always 100% accurate that if you sight it, it is going to go up. But from the previous patterns and from the previous experiences, let me say 80%, if you see it on your trade, 80% of the this thing, you know that if you see the particular trade, it is going to go up. You understand what I'm trying to say? Because based on technical and fundamental, nothing is 100% sure. Yeah, nothing is 100% sure. But just dealing on previous trends. If we're talking about technical or fundamental, you understand what I'm trying to say? So now let's continue. So now the first one we have here is hammer. From the word hammer, you know, let me draw hammer, a structure of hammer. If you see anything like this, something like this is hammer, right? The hammer, this is the handle here with the head here. From the word hammer. In cryptocurrency, if you want to memorize something, just use some, let me see, animal or some object closer to you. Okay, because you can't just use crypto or to, let me say, memorize anything in your head. It will be very, very hard for you if you don't want to be using book up and down. If you want to memorize anything, because some traders, if you don't want to trade, okay, or if you want to, let me say, read charts, they normally put books by their side, or laptop or tablet or anything they can be looking, so that they can compare it to what they're analyzing. But if you're at that time that like memorizing, you don't want to look any book, so you just need to, let me see, find an object or anything that you can use to, let me say, memorize some part of the trade. You know what I'm trying to say? So now let's start. You see, we have hammer, and I've drawn hammer. From the word hammer, let me explain now. You see, hammer candlestick pattern consists of a small body and a long wick extension from the bottom. So now, any part I'm explaining, I'm going to show you how it looks like in the chart. You understand what I'm trying to say? They say hammer candlestick consists of a small body. I've already explained body, which I say is either green or this, what's it called? This is body. Please don't forget anything you are doing. That's why I started from the up. Okay. We'll be using them now. This is the body here, this green part. Okay. They say it has a small body and a long wick. And I say this is what we call wick, right? This particular stick here, that's what we call wick. And a long wick extension from the bottom. They not say from the up. You see, this is it. This is what they are talking now. This is it here. This is what they are talking. Firstly, what did they say? They said Karma candlestick consists of a small wick, small body, which is this is the body. That's what I'm trying to say, and a wick extending from the below, which is this. So now, what is expected? If you see any bullish candlestick pattern, any bullish candlestick pattern must be formed. If, let me say, the price of the particular coin is going down, if it is going down, then it makes that particular pattern. That's when it is valid. You understand what I'm trying to say? Because you can't be, what is it called? You can't go on an uptrend. Something is going up, and you see this kind of candlestick, and you think that yeah, this is particular candlestick. No, as you can see here, you see the trade is going down. Then that's when it formed this. That's when what was it called? This particular pattern valid. It's not something. Let me see. It's not something that start going up like this. Then you will not see it at the top here. You not say it's valid. No, it must the price must be some what was it called chart. Let me say, oh, particular asset must be going down first. Then if you see anything, let me say below when the price is coming down, if you see anything like this, that's an hammer. And if you cite that particular thing, that particular pattern, that means there is, let me say, 80% that this particular price of the particular asset will start going up, it will start increasing. If you just cite it, but there are some things, there's some confirmation, that's what we call confirmation in cryptocurrency. You understand what I'm trying to say? Confirmation means, let me say, for example, now, uh, let me say, for example, now they said if you see this particular pattern in cryptocurrency, it means that particular price will go up. But there's what we call confirmation. Confirmation means after that pattern, there are some particular things again you need to see before you confirm that, yeah, that's what you call candlestick valid. You know what I'm trying to say? It's not only by seeing the candlestick. You know what I'm trying to say? You have to see some certain features because before you know that, yeah, this thing values and let me use this particular thing. That's what I'm trying to say. So now let's continue from the line two. They say this pattern can be seen at the support line to a downtrend. You see, to a downtrend, it must be the what's it called must be going down first before if you cite it. You also sometimes if there is a downtrend and you cite it, you say there's some confirmation first. They give you some confirmation, some confirmatory words that you need to see again. Apart from that, before you know that, yeah, this particular what's it called valid. You understand what I'm trying to say? This is simple, okay? This is very, very simple. You're not saying hammer candlestick typically occur after a price decline. You understand what I'm trying to say? You see, first, the confirmation they gave us, they said it must be on a downtrend. And the pattern, they now say the pattern can be seen at a support line. I've already explained support to you guys. I've already explained support, which I said a support line is a place in which if a particular, let me say, price hit that particular place, it will actually bounce back. Firstly, you have to draw a support line. If that particular, if they give us two confirmations now, the pattern must be close to, if it must not definitely be on a support line, but close to a support line. That's number one. And it must be going, let me say, there must be a downtrend first. And if you cite it, that's when that particular pattern was it called valid. You see, they give us two confirmation first. Then I say number three, hammer candlestick indicate a potential price reversal to the upside, which I've already explained that. They say the price must start moving up following the hammer. This is called confirmation. You see, that is what I've been saying earlier. After this, to confirm that the price, let me say for example now, let's say for example now, after you see this now, after you see this particular hammer now, you can't just rush and start following and start entering the particular trade. After you see the hammer, you have to calm down first, number one, and see that yeah, the price of the particular asset start increasing, start moving up. You see this one, you see the price is moving up with this candlestick here. Another one is moving up here. This another candlestick here. That's when yeah, you have a confirmation like this particular what's it called valid. You now say to entering in this particular place and enter. I don't know if you understand. You see? So and again, it must not be anytime I'm showing now. Let me say it must not be definitely what you be seeing in your chart, like the exact what's it called picture of how you are seeing it here. You'll be seeing it in your chart, okay? In some charts, you see something like this, and it is a hammer. You see something like this, but you see a small wick in this place, small one, not long one, those small one. So that's also an hammer. You see, that's what they are trying to explain. They say little to no wick. There will be little. Sometimes in some charts, you see a little wick there, or there is nothing there. That's what I'm trying to say. And there must be a long lower wick. That's number two. Then I say hammer candlestick bouncing off. Okay, I've already explained that, which you must cite it in the place of support line in this. Let me see support zones. That's what I'm trying to say. So now I think you all understand this now. If times go, let me say when time goes on, let me say after the explanation of candlestick pattern, we enter our trade. Let me see our charts and trying to let me see find 2 to 3 examples of this place and see how they react in the charts. That's what I'm trying to say. So the second one we have here is Morningstar. Let me see. Okay, 16 minutes now. It's 1 hour class. Okay. So now, number two here we have Morningstar. Okay. So now, after explaining this, I'll give you. Let me see how I memorize this. If like I said, I'm the type that like memorizing things using, let me see, some object closer to me or some imagination in my head. Then I'll tell you how I'm able to memorize this. So now, Morningstar is also a bullish candlestick. If you cite this Morningstar in your trade, there's high probability that that particular asset is going to move up. The price of the this thing is going to start increasing, it will start moving up. Okay. So now the first thing they said here, they said this is a three-stick pattern. Three-stick pattern. You see, when we were talking about this camera, they were talking about only one pattern, only one. But this you have to consider three candlestick first, three good candlestick. That's what I'm trying to say. The first one here we have one short body candlestick between a long red and a long, what's it called? You see, a long red, a long green. They mention three different candlesticks here. That's what I'm trying to see. So from what they say this is a three stick pattern, one shot. This is what they are telling, one shot. That's what I'm trying to see. One short body candlestick between a long red, this one long red, and what? A long green candlestick. This is long green candlestick. You see, they are talking about three good candlesticks. One short, which is at the middle. It must be at the middle of two long red and green. You know what I'm trying to say? It must be they are showing how the candlestick looks like. You know what I'm trying to say? You must see the short must not be side or left or right. No, it must be at the middle, and the right must be left. It must be green or red. You know what I'm trying to say? It must be green at the right and red at the left. Then the center one must be short. The center one can be green or red. It's not. It must not definitely be red as you can see it here. It can be green or red. You know what I'm trying to say? I hope you guys are understanding what I'm trying to say. Okay, I want to explain this more and more clearer so that you guys can understand. Okay, so now what do you have in our line two? They say the middle candles of the morning star capture a moment of market indecision where the bearish begin to be where what's it called, the bears which are what's it called, the sellers begin to give way to the bulls which are the buyers. You see, that's why I try to explain this from the beginning, which is the bear and the bull. The most word we'll be using here are crypto words, and that's why I make them simple for you guys, because some people will make anything simple to you guys and you think maybe let me say the meaning are that hard or they are that complex. No, they are very, very simple. The bears are the sellers, people, they are selling, and the buyers are the, let me say, people buying. You know what I'm trying to say? Let me give some analogy. Let me say, in those people who are doing, is it accounting in school? Something about supply and demand. Let me just give, let me see a clear example of that. Let me say for example now, I have 10 oranges. And if I have 10 oranges, and let me see, and we have 100 people that want to buy that particular oranges, the particular price of the orange will be high because 10 people, 10 oranges and 100 people want to buy it. There is more people that, let me see, demand for it, and the quantity is small. You understand what I'm trying to say? I don't know, accounting student will understand what I'm trying to say. If a quantity of something is small and there's high demand on that particular price of the whatever you are selling will go up. Or let me say now, if let me give you the example the other way around. Let me say I have 10 oranges and the people who want the orange are not more than 3. I'll sell it cheap because people don't even bother. Let me say people don't need it much. And if I don't sell, maybe the orange might spoil. So I must sell it cheap, cheap. Any amount they give me that they want to buy, I'll just sell it because the demand are low. And what's it called? What I have, the quantity is high. That's what we have in cryptocurrency. You know, any trade, let me say, any coin you are seeing in this cryptocurrency, that's so particularly, let me say, they have a particular amount that is circulating. You know what I'm saying? They have a particular amount that is circulating. So when you see a particular asset pumping, like the price is going up, let me see, the buyers, what is it called? The particular coin that is circulating is not increasing unless maybe the people that have the project or decided to, let me say, add more. You understand what I'm trying to say? So you know that the what was it called particular coin is not increasing, and if the buyers are much, that's when you see the what was it called particular coin will start moving up. So that's the language they are trying to use. I just give you what's it called the example based on the language they are trying to use. They say the middle candlestick of Morningstar capture a moment of market indecision where the bears begin to give way to the bulls. You see, these are the bears. These people here are the bears. You see, they are the sellers. I know the bears always when the bears anything that involve the bears, they will try to make the market to goes down. They are selling it, and the market will because when they are selling, the price of the what's it called will be going down because they are leaving the coin. They are not holding it. It is going down, and then I said, what's it called? Capture a moment of market is where the bears begin to give way to the bulls. After they are selling it, then they are selling. Then the bulls will now come and start buying it. They will start buying. They will start buying, and the market will start moving up. You see, that's those the cases. It's just like a story in that place. That's why I say charts, like what's it called? Reading of charts is just giving a story. If you see some kind, you can form some imaginary, let me say, imaginary story in your head. What happened in the previous chart? You will now compare it with what you are going to analyze. Just like a story. You see how our Sunday is right? So now, did I say the third candle confirm the reversal and can make an uptrend? The third candle, which is this, confirm like anything, like I said, anything you are doing in cryptocurrency, have a confirmation before entering that particular trade. And I've already explained confirmation. You understand what I'm trying to say? So what I'm trying to say in this, what's it called? In this particular trade is after you see this particular one and you see here might be green or red. You understand what I'm trying to say? So before you confirm that, yeah, this is Morningstar, you have to see this and it must start giving an uptrend, what's it called? Looking before you enter. I hope we understand. So let me just read what they try in some cases there will be gap down. Second candlestick can be okay, like I said earlier. I say this second candlestick can be red or green. They say bullish candlestick pattern. I say this is the bullish candlestick pattern. You see, for the confirmation, the third, like they said here, they say the third candle confirmed the reversal can make an uptrend. You know what I'm trying to say? So as simple as this. So now let's move on to the bullish engulfing. Bullish engulfing, just like swallowing. I will explain that. So now let's start from the first line. They say the bullish engulfing pattern is form of two candlesticks. You see, they are talking about two candlesticks here, not three. Like, what was it called, Morningstar? I said like, I said I will give you how to memorize this. I forgot. I just remember it now. I said I'll give you how to memorize it. Me, how I normally memorize this is, you know, what was it called? You know, if a sun is falling in the evening. You know what I'm trying to say? You see, we are talking about morning from the word statement morning. How I normally was it called? I memorize this is sun going down, and this is evening. You know what I'm trying to say? Then the sun is not shining in the morning, and this is the star here shining in the morning. You see, that's how I normally was memorize, but you can use it in your own way. You can decide to use it in your own way. There's another one we call evening, is the reversal of this one. Let me say the opposite of this one. And that one I normally read morning to evening. You see, and this one is evening to morning. I hope maybe some people will grab what I'm trying to say, but you can use your own what's it called to memorize it. So let's move on. We have bullish engulfing. They say this bullish engulfing pattern is a form of two candlestick. We are talking about two candlestick here. The first candlestick is a short red one. You see, they say short red. It must be red. It's not like something you see the first one green, maybe the second one red. You not say no. They are talking about the first one must be green, we must be red, and must be short. Then it must be short. What did I even stop? Okay, the bullish engulfing pattern is form of two candlestick. The first candle is a short red body that is completely engulfed by a large green one. You see, this is what they are trying to say. Okay, you see, this is the short one they are talking about, and this there must be a green one which engulf this. Engulfing means like it will give double the size of this first one. You see, like it swallows this one. That's what I'm trying to say. You see, this particular grain must be, let me say, two times taller than this particular one. Like it engulfs, swallow this red. That's why they use that word. They're bullish engulfing. So if you see this particular pattern in your trade, you know that yeah, there's high probability that this particular what's it called is going up. So they now say the buying pressure increases, leading to a reversal of a downtrend, a reversal of a downtrend. You see, normally I said if we're talking about bullish, a bullish candlestick can only be formed when there is a downtrend first. You see this a downtrend, then form in this place here now. You understand what I'm trying to say? You now see the second bullish candlestick is engulfing the body of the first bearish one, like I've already explained. This is the first, this is first, what was it called? Sorry, this is the first bullish one, engulfing the what? The bearish one. I hope now you're already familiar with bearish and bullish now. So good. You see, they say the second candle is bullish and the bearish candle. This is the first one is what's it called? Candle. What's it called? Bearish candlestick. Okay. So now let's move on. We have what? Three white soldiers. Three what? White soldiers. From the word three white soldiers, what comes to your mind? You know that here we're talking about three good candlesticks, three good ones. We are talking about three good ones. That's why I like this PDF. Some people don't just notify you, they just talk about some. They will not tell you that it involves how many candlestick and others. You know what I'm trying to say? They say this pattern is made out of three, you see, long green candle in a row. You see how they explain it step by step. It must consist of three long. It's not short. We're not talking about short or dodgy. You know, three. Number one, green and long. We're not talking about red here. We're talking about green. You know what I'm trying to say? In a row, and they must be in a row. It's not like you see green here and you see red small, then green. No, it must be green, long, then another green again, long. Before you know that, yeah, this is actually a three white. This is what's it called? Candlestick called three white soldiers. And if you see that particular candlestick, we're expecting the market to move up. We are expecting the market to go in a bullish way. Hope you understand. Then the second line to this, let me first what's it called? Show you the three. I stopped the video. Okay, I did not stop it. Wow. So now let me show you the three. What's it called? We're talking about here. Can you see them here? Can you see the three candlesticks we're talking about here? And they must be long. See, this is the first one. You see, after this first one, we're not seeing anything like red. Yeah. You must see another green here. Then the third one must also be green. Before you know that, yeah, this is three white soldiers. And if you see them, you know that, yeah, the market is going on in bullish way. Then you can now do your own setup and do the rest. And you see, like I said earlier, any bullish candlestick, before it let me say it forms, there must be a downtrend first. That's just it. Always note this, okay? Always note this. So the third line says this pattern is considered a reliable reversal pattern when confirmed. You see, a reliable. Even this candlestick, there are some. Let me say main ones, the strong one. We have different type of candlestick, but the ones in this PDF are the let me say the most commonly seen in the world we call and the most commonly used in trade. That's what I'm trying to say. They say this pattern is considered a reliable reversal pattern when confirmed by other technical indicators like the relative strength index. This I want to call it as some indicators. I'm trying to explain part of that later, not now. I think indicators are not in this particular what's it called PDF, but I'll explain that later. Okay. You see? So now from the picture it says three long candlesticks. I've already explained that. You see, and you see it will be going on a bullish direction. To be going up. If you confirm this, the chart will be going up. The price of a particular thing, you can now decide to long it since we're talking about bullish. I hope you understand now. So let's move to the next one. You see, we are done with bullish, what's it called? Candlestick. I said we have more, but these are some of the main ones. If you want to know more, because cryptocurrency you can't know all. You just do your best. You just like school. You can't know anything in school. You can't know everything. Even the professors don't know anything, like everything. No, you can't know that, okay? So you can decide to browse. You can browse them like what's it called, bullish candlestick patterns. You see different ones and learn them. You can learn more. Only just to give you the basic idea. You know what I'm saying? You can see if you see another one, you can easily let me say translate it to yourself how you understand it. That's what I'm trying to say. So now let's move to what bearish candlestick.